Where is the pound likely to trend next following that break below 132? That's what we're talking about in today's video. And we're also going to discuss the latest on the DXY. So I'll show you my targets there and also for the pound. So looking here at the weekly time frame, guys, for GBPUSD, what we've talked about here in the last few videos was the failure to hold above the top of this channel. So you can see that this lower level actually goes back to these lows back here in early 2023. And if you draw a parallel level off of these lows back here, what you'll see is that the market broke above this, okay, back here. So we had the close above on this candle. It held up as support through here. And then we had the failure here recently from the pound. Now, furthermore, what we've also talked about here for GBPUSD is the fact that the rally that started back here in April, we had a bit of a change here in structure following this weekly close back below 132 to 132.50. And the reason for that is you can see back here, we've talked about this at length, but you can see that this closing price back here, okay, nice stair step pattern up. The market broke above this on this high. We then had a retest back here. The market never closed below it on the weekly. And the same thing back here. We got a test here, but never closed below. Now notice this high up here. Okay, we saw the market, we saw the pound, rally above this and then close below it right here. So this right here triggered a failed breakout from the pound. And this is where we saw the change of structure here for GBPUSD. And this is what opened up downside targets. Now, at the same time, we've seen the DXY reclaim some very significant levels and turn rather bullish. All right, so we'll talk about that next. But you can see here that on the daily, this level is not quite as clean. However, like I said, the weekly time frame is really where it's at here with GBPUSD. And the failure to hold above this area back here is really where we got that change in trend. So since that happened, I was looking for shorts on the pound, on the euro, and also turning bullish on the US dollar. Now, with regard to the pound, okay, we can see that the market on Wednesday's session closed below a critical area back here. So notice how we have this high from right back here. We've also got these lows. So this close right here flips this area to new resistance. Now keep in mind that this could be a fake out. We could get the market closing back above it, but right now we're looking at 130.50 being resistance for the pound. So where is this market likely to target as long as it stays below 130.50? And before we get to that, guys, if you do want a broker that you can trust and also trade Forex, crypto, commodities, indices with leverage, get 24/7 support, and it's also a broker that I've trusted for about 7 years now, be sure to check out the link in the description of this video and sign up with Blueberry Markets today. They are an incredible broker. I've met them in person. They are trustworthy and just a great group to work with. And also for a limited time, guys, when you deposit using my link, you are going to get a 30% deposit bonus. Plus, if you deposit $1,000 or more, I will grant you lifetime access to our trading group. All right, so looking at the pound, where are we likely to target next following this breakdown below 130.50? So as long as this area back here holds for the pound, I'm looking at the move down here toward about 128.90 or 129 or so. And the reason for that is you can see that we have this candle right back here. So notice how following the close of this candle, the market never pulled back here to in this area. So this right here creates an imbalance or inefficiency in the market. And a lot of times these do tend to serve as magnets for a market, especially when you get breakdowns like we had here on Wednesday. So as long as the market is below 130.50, okay, as long as it's holding below these lows on the daily time frame, then I do like the idea of the move down here to fill this inefficiency right around 129. Okay, so obviously timing is going to be key here. You really want to see the market kind of pull back into this area to get a proper entry. And like I said, if the market were to close back above 130.50, then that could trigger a fake out here from the market and send it higher back here towards some of these highs. But right now, 130.50 is going to be resistance for the pound, and support comes in down here in that 129 area. Now, let's flip over and take a look here at the DXY, the US dollar index, because this is the chart that, in my opinion, has been incredibly clean in the Forex market. It's been one of the cleanest out there, in fact. And when you look at this is something that we've talked about now for weeks, where you can see that we had this channel back here from 2023. So these highs, we've got these lows through here. This is an equidistant channel. So these two levels run parallel to one another. And you can see where we got the breakdown back here. We had a falling wedge that formed that we also talked about here. This squeeze right here targeted the 102 area and also 102.60. I've talked about this in these videos over the past few weeks. And what you'll notice here, recently we did get a test of 102.60. And like I've said in recent videos, guys, I know that a lot of people were looking for shorts through here in this area because this was resistance. However, if you had watched the videos and really listened to what I said, I was not looking to short the US dollar through here because of the aggressiveness of this move. Also, the fact that the market had reclaimed these highs back here. So I was actually looking for a reclaim of 102.60, which we got right here on this candle. So we have since seen multiple days above this. We've also seen weekly closes above it. So in my opinion, this move down here is an incredibly significant reclaim for the US dollar. And this is something where, in my opinion, we are probably going to see the US dollar benefit from this for the coming weeks and even months, just because this was so incredibly significant. Remember, this is a pattern that goes back to 2023. So it has been around for a long time, and a reclaim like this, in my opinion, is very, very significant. So looking at the DXY now, we did have some more resistance up here at 103.20 to 103.30. So you can see these highs and closing prices back here. So this consolidation was resistance. You can see we got the market stalling out for about 24 hours. However, this is how strong the US dollar has been. It blew through this within about 24 to 48 hours. And once again, closed above, right? So now this area down here is going to flip to support. We've obviously got 102.60 down here as well. But when you talk about targets for the US dollar, looking at this area up here, all these lows back here, all right, in my opinion, this is probably where the US dollar is headed next to test these lows back here. So really between 104 all the way up to about 104.50, this is going to be resistance here for the DXY. Now, of course, we are seeing the market sell off a little bit here today based on some of these lows back here. But, ultimately, I do think before we get a pullback from the US dollar, we are likely to see this area between 104 and 104.50 come into play. Now, I'm sure that when the US dollar gets up here, a lot of people are going to be looking for a continuation of this downtrend. And even though we could get it, right, a lot of people are going to be looking for this, a continuation of this move lower. Even though we could get that, like I said, I think this reclaim back here is incredibly significant. We've also got support up here. So in my opinion, if we see a pullback from here, it's likely to be, a bit more shallow. And then from there, potentially a breakout above this to target some of these highs back here. All right. So just my opinion. But again, I'm basing all of this off the fact that this reclaim down here is incredibly significant for this market. And I don't think that that's going to end anytime soon. I think that this probably plays out through the rest of 2024 and potentially even the first part of 2025. Okay. So when you compare that to the pound, guys, even though right now the setup for today that I'm talking about here, and as always, not financial advice, just my opinion. But this setup here, if this area holds up around 130.50, then we get that move down here toward this inefficiency right around 129. So even though I'm talking about a very short-term opportunity here of about 100 pips, maybe a little bit more, I do think when you look at the weekly time frame, when you look at the DXY, I do think that in the bigger picture, we are probably going to see the pound continue lower here. Okay, even if we get a retest up here in this area over the coming weeks, we are likely to see the market continue lower to test the bottom of this channel. And that's simply because of that DXY reclaim we just talked about. Also, this failed breakout here from the pound. Typically, when you see this from a market, you do get an extended move in the opposite direction. And when you're talking about a pattern like this, you do tend to get a retest of the opposite side of that pattern, which would be down here in this area, also to test these lows. Okay, but keep in mind, that could take weeks or even months to play out. So I hope this video has helped, guys. Again, 130.50 is going to be resistance, and 129 is going to be support. However, just keep in mind, though, if we do see an aggressive retest up here from the pound, then that could be problematic because it could indicate that this down here is a fake out and we could get that move higher to test some of these highs. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.